Last year, I paid $0 in federal income tax. Not because I lost money, not because my business struggled, and not because I found some secret loophole. I paid $0 in taxes while operating and owning a real estate portfolio worth over $97 million. Now, before you roll your eyes and assume this is some billionaire tax trick, let me tell you something that might surprise you. Everything I'm about to show you is written directly into the tax code. In fact, the government wants people to use these strategies. The problem is most Americans, they spend their entire lives earning income in ways that receive the fewest tax advantages possible. And because of that, they pay far more in taxes than they need to. Now, as a real estate attorney, I've spent every day helping investors structure deals, build wealth, and legally reduce their tax burden. And today, folks, I'm going to show you the exact framework that the wealthy real estate investors use to keep more of what they earn. By the end of this video, you're going to understand why taxes aren't really a punishment. They're an incentive system. And once you understand the rules of the game, you'll never look at taxes the same way again. So let's get into it. What is the biggest misunderstanding about taxes? Well, it's that most people think the tax code exists for one reason, to collect money, but that's not actually the primary purpose. The tax code is one giant incentive program. Think about it. The government wants housing built, right? It wants jobs created. It wants communities developed. It wants economic growth. And instead of doing all of that itself, it rewards private citizens who help make it happen. The tax code is essentially a giant scoreboard. It's the government's way of saying, if you help us accomplish these goals, we will reward you. The problem is that most people never learn what those rewards are. They're working harder every year, making more and more money every year, yet somehow paying more and more taxes every year because they're focused on earning income, while wealthy investors are focused on earning income strategically. That distinction changes everything, and that's where what we call the tax freedom framework comes in. Now, I call this the tax freedom framework because there's 4 strategies that are built directly into the tax code that can dramatically reduce what you pay in taxes while also helping you build long-term wealth. Individually, each strategy is powerful. Together, they create a system that has helped countless of investors legally eliminate or significantly reduce their own tax bill. And the best part, none of it is a secret. None of it's aggressive. None of it is a loophole, and simply understanding how the game is actually played. Let's get started with the strategy that completely changed the way I view investing. Strategy number 1 is called depreciation. Imagine owning an asset that increases in value every year, yet the IRS allows you to report a loss every year. Sounds impossible, right? It's not. It's called depreciation. When you purchase an investment real estate, the IRS allows you to write off a portion of the property's value over time as though it's wearing out. The fascinating part about this is that many properties are actually appreciating while you're taking these deductions. So in other words, your net worth can go up, your rents can be going up, your cash flow can be going up, and your taxable income is going up. But guess what? That's why depreciation is often referred to as a paper loss. Let me give you an example. Suppose you purchase an apartment building. The property generates positive net cash flow, the value increases, but because of depreciation, the IRS allows you to deduct a portion of the property's value every single year. That deduction can offset income and slightly reduce your tax burden. The first time I experienced this, it completely changed my understanding of wealth creation. But depreciation isn't just the appetizer, because what if you didn't want to wait decades to claim those deductions? That's where strategy number 2 comes in. It's called cost segregation. This is where things get really interesting. Most people, they know depreciation happens over 27.5 years for residential real estate. That's in the tax code. But what if you could accelerate years worth of that depreciation into the first year? That's exactly what cost segregation does. Engineers analyze the property and identify components that depreciate faster. They take away the real property versus the non-real property, like the building, right? Things like lighting, flooring, cabinets, appliances, parking lot, landscaping, right? All of that. Instead of waiting decades to claim those deductions, many of them can be accelerated. The result is that potentially massive first-year deductions. I've seen investors create 6-figure deductions from a single acquisition. And for high-income earners, that can be a game changer. But there's a catch. Those deductions become significantly more powerful if you qualify for the 3rd strategy. And this is where most people start to get a little bit confused. It's called the real estate professional status. If you're a high-income earner, this might be the most valuable section of this entire video, because this is where the tax code starts treating real estate differently. Most people assume passive losses stay trapped forever. Not necessarily. If you qualify as a real estate professional under the IRS rules, those losses may become dramatically more valuable. Now, let me clear up a common misconception. You do not need a real estate license. You do not need to become a real estate agent, and you do not necessarily need to spend all day showing houses or looking at apartment buildings to become this. You simply need to understand the rules and determine whether you qualify. I've seen families save tens of thousands of dollars, sometimes hundreds of thousands of dollars, once they properly structure their real estate activities. And if you think that's powerful, wait until you see what happens when it's time to sell, because that is when strategy number 4 comes in. The 1031 exchange. Most people think selling an appreciated asset automatically means writing a huge check to the IRS, but real estate investors have another option, a 1031 exchange. The 1031 exchange allows investors to defer capital gains taxes by reinvesting their proceeds into another qualifying property. Think about what that means. Instead of your wealth getting interrupted every time you sell, you just keep snowball rolling. You preserve more and more capital. You buy larger assets, you generate more income, and you continue compounding over time. Now, over time, that can create an enormous difference in long-term wealth. Many of the largest fortunes in America were built using this exact principle. Not because investors are avoiding taxes, but because they're deferring them and keeping their money working. Let's recap. The tax freedom framework is 4 things: depreciation, cost segregation, real estate professional status, and 1031 exchanges. Every one of these strategies is legal and it's available to you. Every one of them is written directly into the tax code, and every one of them exists because the government wants more housing. They want more development, more investment. Here's the truth. The wealthy don't win because they know secret tax tricks. They win because they understand the incentives. The tax code is simply a list of rewards for people who do what the government wants to do. Once you understand that, you stop asking yourself, how do I pay less taxes? And start asking, what behavior is the government rewarding? That's the question that changed my life, and it can change yours too. My name is Todd Robinson. I'm a real estate attorney, an investor, and a mentor. Last year, I paid $0 in federal income taxes while operating a real estate portfolio worth over $97 million. Not because I broke the rules, because I learned them. Now, if you're a high income W-2 earner and you'd like to see how those strategies could apply in your situation, click the link below. Let's schedule a call with me and my team. We'll walk you through the circumstances and help you identify opportunities you may be leaving on the table every single year. And if you found this valuable, subscribe to the channel. Every week I break down the legal, tax, and wealth building strategies that most people never learn.